All right, well, welcome back to the iWealth podcast, and it's 2025 Q1. We're talking tariffs.
Yeah, it was an interesting quarter to say the least, Matt. Like, we've put out a couple videos to our clients, did a little bit on social media. Tariffs, right? I mean, it's like what's happening today. You wake up and read the Wall Street Journal. It's like, what's going to happen today? And a little bit like Groundhog Day because it's back and forth. I don't know. I mean, have you had people asking you on the street or just friends, like, what's going on? Or?
Yeah, we went to a meeting the other day, and somebody said in the meeting, they're like, I lost a huge amount of my retirement. Looks like I have to work another year. That was her comment.
Well, fish don't clap, so working another year is not a bad thing. Losing money is a bad thing. But let's talk about this. So Q1, guys, like S&P was down 4.2%. Small cap stocks, the Russell 2000 is down 9.5%. And so a correction in the market is a 10% pullback. We've been in correction territory, like off of a high with all these indices. We've also, have been in a bear market in some indices, which is a 20% decline from peak to trough. But anyway, small cap stocks are down 9.5%. Large cap stocks, the S&P 500 down 4.2%. There were some positive. Energy was up 9.5%. Healthcare was up 6%. Consumer staples were up 4%, utilities up 4%. International stocks did okay for the first quarter, for the first time in a long time. So what you saw is a big rotation in Q1. You saw a rotation out of technology stocks, the stocks that we talked about on why you should be in an equally balanced S&P 500 instead of one that's overweighted, which they typically are. But anyway, you saw a big rotation back to dividend-paying stocks, what I would call, Matt, BOG, big, old, and good. So stocks that you've heard of, stocks that pay a dividend that make money, we saw a rotation in the first quarter. But what I really want to touch on is this volatility. We haven't had volatility the last 2 years. There just really hasn't been any. And when you look at the average intraday changes throughout a year, it's 13% decline. Every single year, on an average, at some point, you're going to have a decline of 13%. Well, we haven't had it the last couple of years, and so in comes the tariffs. In comes Trump and making these changes. And the market got jittery, and the market got scared. And there's no doubt that there's people affected by this, positively and negatively. Like, I have personal clients of mine that have been affected by the tariffs. Like, it's a real thing. But here's what's interesting. From an investment standpoint, this doesn't move the needle. And what I mean by that is the fact that there's tariffs on and tariffs off and all this stuff going on. History is going to show you that if you just stay disciplined and stay invested, you're going to be okay. So you need to make sure your asset allocation's correctly. You need to make sure you're rebalancing your portfolio so you're not out of whack. But you just got to let this time pass. If this money's retirement money, if it's money you don't need tomorrow to buy your vehicle, and it shouldn't be in the market if it is, like, just let this thing pass and take a big deep breath. Yeah. Did they take a deep breath at the meeting you were at the other day?
Nah, not really.
Yeah?
She was pretty whipped up. Had I been smart, I would have told her, "This too shall pass."
Right, exactly.
I love that saying.
It's almost biblical, right?
Yeah, this too shall pass.
The other side is I've had some conversations with people. There's the way to invest fundamentally, meaning you go and look at a company and you look at their balance sheet and you look at who's running the company and say, I want to invest in that company. And then there's the way to invest, which is using technical analysis, peak to troughs and PE ratios and the 100-day moving average and things like that. And there's investment advisors out there that will manage your money to either segment, fundamental stock picking because of what they think long-term and what's going on with the company, or the technical part. We had a day in the last couple of weeks where all of a sudden there was a 90-day pause in these tariffs, and the market was up 8, 9, 10% in one day. Well, these technical people that trade on the technical side of things, when the market starts to go down, they pull your money out of the market. And they weren't back in the market. Most of them weren't back in on the day. All of a sudden, it spiked 8%. And so it's just a reminder that you just need to fundamentally stay long in the market, not short, and not make those shortcut kind of moves. Long term, when we look at the speedometers from City National Rockdale, one of the people that we happen to place some funds with, City National Rockdale has these speedometers that are red, green, and yellow, so a simple guy like you and I can understand them. Some of those speedometers went yellow. So there's only 2 red yet. That's the way it's been all year. It's geopolitical risk and The other one's price to earnings ratio, or how expensive stocks are, which I was surprised that didn't turn yellow. But some of the green went yellow, which means that we're a little bit in this quandary of where's the next movement going to go. But long term, we're still very bullish on this market. Fundamentally, people still have money in their bank accounts. They're still spending money. I get the pushback on jobs, all these government jobs we're losing.
Yeah.
Like the government is 1.5% of the overall employment of the country. So the 20,000 jobs that aren't there or whatever, it hasn't moved the needle from an unemployment standpoint. We're at 4.6%. 5% unemployment's no unemployment, because there's always somebody that just doesn't want to work and they're unemployed. So we're on really, really good terms right now, I think, with this market. You just have to let this thing pass.
This too shall pass.
That's right. That's right. So, the main thing is that whoever's watching this, like if you have some questions, you just need to get a hold of somebody that is attuned to the market and ask these questions of them. But if you're, just turning your cheek and letting your 401k go and your investments go, it's the right thing to do at this time. Also, if you're putting money in the market or been sitting on the sidelines, I think it's a great time to put money to work. If it's, next 3, 5, 6, 7 years before you need it, it's a great time to be putting money in. People try to pick the bottom. You never know where the bottom is.
Yeah.
It's too hard to pick. The market's down from where it was, 4 to 10%. Put your money to work.
Put your money to work.
Yeah.
Well, that's Q1, right?
That's right.
Of 2025. Anything else that we should know about 2025? The beginning, the kickoff to the year?
No, just expect more volatility. That's all I can say. We don't know where this thing's going. So.
All right. We'll see you back here next time.
All right. Thanks, Matt. Take care.